A follower of mine by the name of Henry wrote to me yesterday and asked this question. I'm starting a t-shirt business and I need to know how to price my shirts in a way that will allow me to hire an employee when the business grows. This is a really good question and one that every small business owner struggles with. Henry, I spoke with Keith Mattson. He's a CPA, and Keith talked with me about the basics of cost accounting. It's a method of pricing your product that takes into account all fixed expenses and the variable expenses associated with making the product. And you use this to find a break-even point. First, you must understand your fixed expenses on a monthly basis. Rent, utilities, the whole group of expenses that you have regardless of if you sell anything at all. Now you must have an idea of a price range that your shirts will sell for. Pick a price in the middle of the range. Divide that price into the cost of your fixed expenses. This is the number of shirts you need to sell to cover your fixed expenses. You're halfway to understanding how to price your shirts. Now you need to calculate the variable costs. That is, what does each shirt cost to make? Remember, you're trying to determine the break-even point, how many shirts must be sold to cover expenses. Once you have the variable cost for each shirt, then add that onto the fixed expenses you calculated before. Now you have a total of monthly costs. Once again, take that middle of the price range that each shirt will sell for and divide that into the total costs. This is your monthly break-even point. You now know how many shirts must be sold to break even. But this doesn't quite answer Henry's question. He wants to know how to price each shirt to allow for growth in hiring employees. What Keith is saying is growth of the company has everything to do with first producing and selling enough shirts by you to break even. Notice I said break even with you doing the production and sales. You must absolutely pay yourself as if you were an employee. This is a cost of doing business. Not paying yourself will give you a false break-even point. Listen, you're good at the product or service that you provide. You deserve a wage for doing this work. Secondly, and this is important, you as a business owner deserve a profit or a return above and beyond paying yourself a wage. This pays you for taking the risk of starting the business. Henry, the answer is to figure how many units you need to sell in order to cover fixed expenses, plus variable costs of making the product, plus profit. Remember, employee expense, your wage included, is part of fixed expenses. The question I have for you is, can you sell enough shirts to cover the additional fixed expenditure? I hope this answers your question. Good luck, Henry. Do you have a question concerning small business? Listen, owning your own small business is really hard work. If you have a question, I'll do my best to find you an answer. Write it in the comments below. Thanks for watching. I'm Steve Freeman with GreatBusinessContent.com.